Good afternoon. How are you all doing? Hopefully it has been a good day. This is the peak of it. I feel like an aging boy band member with my microphone on. Seed Innovations. So my name's Ed McDermott. I am CEO of Seed Innovations. And essentially what I hope we can do here is give you all a flavor of what Seed does, why we do it, and ultimately why Seed should be part of your small cap portfolio. I think there are very compelling reasons as to why. Over the last 2 years particularly, raising capital has been extremely difficult, and companies are having to, in many cases, crush their valuations in order to raise fairly meager amounts of capital, and obviously being publicly listed, that is often their only choice. In terms of what Seed does, we're in a very different and unique position. I would read you through the disclaimer, but I think we'll be here for longer than I'm allocated to speak for. So as a general overview, our fund is AIM listed, but we're also Guernsey Financial Services Commission regulated. At the moment, we have a unique position in that we have more cash in the bank, cash and cash receivables, than our entire market cap. So essentially, our portfolio of assets is being valued at negative. We have a balanced and relatively versatile portfolio in such that none of our assets are ultimately more than 15% of the entire fund. So we're not overly exposed to any one asset that will decimate the fund. We've got a very experienced team, and I will cover them as we move through the presentation. And crucially, we have a real track record of delivering real cash back into the fund. And there are only 3 ways in which you can really reward investors and your shareholders, one being through share price appreciation, one being through dividends or special dividends, and another through buybacks. These are all ways in which you can ultimately deliver value back to your shareholders. And these are all things that we've considered. Certainly at the moment we are doing a share buyback. We believe that our shares are trading so cheap that we have ultimately agreed with the approval of our shareholders to buy back up to 10% of our shares in issue at up to 6p, and we're currently trading at 2p. In terms of our investment approach, we try and approach things as you would if you were a large company looking at much larger assets. This is not always possible, and thankfully we have a team that is very, very capable with a lot of experience across PE, VC, and from all different angles, from accounting through to strategy, through to IR. So we really believe that we cover the whole spectrum in terms of how we approach our investments. We don't subscribe to the view that as a VC, it's a 1 in 10 goes well and you might get a few that go okay. Our view is that every single investment we go into, we want to be heavily involved in that investment and help steward it towards an exit. So our entry is made with exit in mind. In terms of key data, I won't labor the point in terms of share price, etc., but as you can see, a 4.5 million approximately valuation versus about a 14.6 million pound NAV as of the 30th of September 2023, which again included that cash and cash receivables piece of 7.1 million. What is interesting is our investors. Jim Mellon recently increased his stake to near 10%. I won't go into who Jim is. Hopefully you're well aware attending the show today. Peter Saladino is a prominent North American businessman, worked in a number of industries, had a lot of successes. Norbert Teffelberger, very big in the gaming space, and then myself at just about 2.3%. In terms of the board, I won't bore you with my background at this point in time. We have Lance, DeJersey, and Alfredo as my fellow executive directors. And then Ian and Luke. So we have very good corporate governance in place alongside our Guernsey Financial Services Commission, and being AIM regulated, I am also personally FCA regulated. Moving into the portfolio. So currently we have 8 investments across health, life sciences, biotech, medical cannabis, and 1 legacy asset in the technology and fintech space. I'll go on to why a number of our assets have been very successful, particularly in the medical cannabis space. And obviously you've just heard from Juvenescence, so that might look familiar. That is one of our assets which we currently hold at around 2.5 million of value. Clean Food Group, who you may have come across at the show today, is another asset which we are currently just shy of 5% in. And of course, we have our cannabis assets, one of which is listed in the form of Little Green Pharma, and Avextra, which we recently had a partial exit from. These are our 2 quoted investments. Little Green Pharma, listed on the ASX, a company that's doing really, really well in what has been a very difficult sector, and Portage Biotech, which again might be a familiar name to you with Jim Mellon's previous involvement. Our private investments are where the bulk of our value is held. As I mentioned previously, Juvenescence held around £2.5 million. Avextra, although it's recently done a raise which would increase our value potentially by up to about 1.1 million, we do need to have that properly assessed when it comes to recording our next net asset value statement. Clean Food Group, I'm actually a co-founder of Clean Food Group, and it is doing very good work in terms of tackling what is a very big crisis of deforestation, but ultimately what Clean Food Group does, and as I said, I hope you've had a chance to speak to the company, but they create food oils in a laboratory or manufacturing facility environment, which is hugely more sustainable than how those oils are currently created. Invenium is a legacy asset that I previously mentioned in the space of blockchain and AI. They're actually doing very good things over in the US, and although it's not a big investment for us in terms of valuation, it's around about the £500,000 mark. That's where it's currently recorded on NAV. We hope that they will be looking, when the markets, particularly in the US, become a little bit more forthcoming for IPOs, I expect that we may see Invenium go down that route. Northern Leaf and Otto, these are 2 of our, I would say, more disappointing assets in terms of they've both had quite negative revaluations recently. So really, the bulk of our NAV is held in cash receivables, and the aforementioned 6 investments. This is a visual of how our portfolio is broken down. And again, as you can see on the right-hand side, cash is looking very, very strong. And we believe that's really critical in a market like this, where companies are finding it, very good quality companies, but also bad companies alike, are all trying to raise money. And it's really what we'd like to think of as a buyer's market. We're not looking to rush these investments, because ultimately the goal has to be delivering back to shareholders in those 3 ways, and ideally all of those 3 ways, but particularly the first 2, which is share price appreciation, and hopefully in addition to that, special dividends. That is, when we sell assets for certainly significantly more than we hold them for, we want to be able to deliver that cash back to investors while retaining enough cash that we can still make solid investments and create that organic growth. We don't want to be out raising money, and thankfully it's something that we do not have to do and don't envisage us having to do any time in the near or distant future, quite honestly. Here's an example of a company that we supported through its growth cycle. This is Avextra. We had a partial exit where we essentially took all of the money, just shy of all of the money that we invested, off the table in cash last year, and we are ultimately riding the rest, which again is about the same quantum that we invested originally, which was circa £2.6 million. And Avextra is a great example of a company that's had very good stewardship. Management that are very, very good custodians of capital is really, really important to us. We don't want to see money spent needlessly. We don't want lots of consultants that don't really add value to the business. We want individuals that really know what they're doing as a management team. And it's proven to be a successful investment, and they've also managed to attract capital from new investors at regular junctures. And I think that's another key thing that we look for in management teams. Management teams that are able to continually make sure that the company has good cash, because as we know, in a market like this where you are out looking to raise cash, it can become very, very, very difficult, and your valuation is likely to take a hit. Again, another example, Clean Food Group, which we've already mentioned, and it's very, very important for us to support the companies that we feel are going to be the big winners. In the case of Clean Food Group, it's a company we know extremely well. I'm a co-founder of the business and a personal investor alongside the fund. And ultimately, when you believe in the management team, when they're doing all the right things, when they're taking as capex light approach as possible and still being successful, that bodes well for the future for our shareholders, which is ultimately why we exist. Here are some cannabis-related case studies. This was a market that we did exceptionally well out of, particularly when you put us relative to the market. I think we would probably be the most successful European fund that invested in the space. And critically, we have had exits at every different stage of the cannabis market. There was the initial boom, at which point we were invested in a company called Nuvera, which was one of the early Canadian companies. It was very much involved in the medical space, so that allowed us to make that investment without causing any legal issues. And in that case, we were able to deliver 4.8 times return on our cash invested over a fairly short period of time. It was about 14 months from investment to exit. In the case of EMAC, it was around about 2 years, but again, real cash returns of about 1.86 times cash. And of extra at this point in time, as I previously mentioned, we have taken a partial exit and received nearly all of our investment back, and we still have that riding at about the same value, double essentially what we invested. So as I said, I think we're a real safe haven for investors right now. There are very, very few small cap funds that you can invest in that are more than cash backed versus their market cap, have assets that are in play, that are well capitalized with good management teams. And I think we have a very strong period ahead of us where we can get real value by investing that capital very methodically, very sensibly, and with a value-add approach where we are actively getting involved in those companies. Now, I apologize, this is a fairly quick run-through of the company. Obviously, you would have met some of our portfolio assets today, but I'm obviously be absolutely delighted to speak to anyone afterwards that wants to get a more in-depth view. And there is a lot of content online available where you can get a more detailed approach on individual assets that we're invested in. But ultimately, our goal, particularly over the next year or two, is to turn around our new investments and have a cycle essentially going where we can increase our share price and hopefully be able to deliver real cash back to investors in their pockets. Thank you very much.